Welcome back to our monthly dive into the Hamilton real estate market. Today we're breaking down the activity for May of 2024 and looking ahead at what might come next. So grab a coffee or some other beverage and let's get into it. May wrapped up with the median home value at $752,500, up just over 1/3% from April and 6 3/4 since the end of 23. Compared to last April, prices are basically unchanged and still down about 21.5% from the peak of February 22. Now, homes spent a median of 16 total days on the market before selling, which is 2 days fewer than last month, but 4 days more than last May. Typically, May has the lowest cumulative days on market for the year, so we might see this start to rise over the remainder of the year, as history suggests. And in terms of what these small changes month to month and mid-year mean, they're not that drastic, and it's hard to read too much into it other than likely just standing there. Now, moving on to relative inventory, we ended May with 2.9 months of inventory, up 0.4 months from April. Historically, this number decreases slightly from April to May, so this marks a change in the intra-year trend we would expect. Now, compared to last May, when there was 1.5 months of inventory, we've got almost twice as much inventory now. So this May's inventory level is 82% higher than the average of the past decade for May, and 0.6 higher than the next highest May of that period, marking a significant shift. So relative to demand, we got lots of inventory compared to what we're used to seeing. On to sales, we had 644 sales in May, the lowest for May since before 2014, except for the COVID-impacted May of 2020, which we barely surpassed. And despite a brisker start to this year, sales volumes are now trailing last year's by 4% and even trailing the sluggish 2020 volumes when the industry was virtually shut down for the better part of a couple of months. Month to month, we've also seen a decline in sales volumes compared to historical averages for months, ending May at just 72% of typical May volumes. Now, lastly, this month was down 17.5% in volume from last May, indicating a slow market. Last May was slow, so one word to describe it: slow. New listings were up to 1,427 in May compared to 1,265 in April. That's an increase of 13%, which is pretty typical from April to May. When we look at the historical norms, this number is only about 3% higher than the typical May average, so nothing too surprising there in terms of what's coming to the market. However, with the increase in new listings and the sluggish sales, the sales to new listings ratio has been significantly impacted. That ratio dropped to 45.1% from just over 50% in April, marking a significant decline for this time of the year. We did not see a slowdown in new listings relative to historical volumes, but combined with the continued depression in demand, we ended up with the lowest sales to new listings ratio from May in well over a decade, even lower than the sluggish numbers we saw 2 years ago in 22. And compared to historical monthly averages, May's ratio is about a third lower than the average, considerably outpacing any other month this year. And as the weather heats up, the same cannot be said for the market, which continues to cool, favoring buyers, a position we're certainly not used to seeing. At the end of May, we had 1,870 units on the market, up 63% from last May and 34% higher than the average for May. But that 34% higher is pretty consistent this year. Every month, we've seen volumes about 25 to 35% more inventory on the market than we would see normally. So no wild fluctuations or clear trends emerging other than just simply having more than usual each month of the year. Now, overall, the market suggests a balanced scenario that continues to slightly favor buyers more and more each month. Despite dropping demand and growing inventory, though, prices went up last month, which is unexpected. I've mentioned it before, but this could be due to a lack of overall inventory in Ontario. We need about 1 million more units, or sellers just waiting for a demand and uptick to pull the trigger on a sale. Or it could be a number of other things that affect a large, complex, and dynamic economy like the housing market. I believe there's no lack of interest in buying. It's just not turning into active demand right now. And I think sellers are holding out for that uptick in demand. But if you have the resources, now is a good time to lock up a variable rate and buy, a position I have held for the past few months. If you've been watching, you've heard me say that before. Now, there is a rate announcement tomorrow, and many do expect a reduction the first of 2024. And this could spark enough interest to kick the market out of its current stasis. So that'll be a big piece of news if it does come to fruition. So keep an eye out for that tomorrow. Now, we'll see what happens. But for now, have a great June and start to the summer later this month. Thank you very much for your time, and we'll see you again soon. Take care.